Talking about now an example of misguided regulation in the resource space. Rob Milbourne, KLL Gates partner, alongside being our special correspondent there for you in Brisbane. Rob, welcome into the show. What you've kind of summarised is quite startling, as it were, the time frame on the boom, as it were, to relative bust, but the problems that corporate Australia seemingly has with making decisions and making well-founded ones on assets, not least of all close to where you are, like a coking coal deposit. When will we learn about these boom-bust cycles in the right way, rather than blunder after blunder?
Hi, Carson. Thanks for having me back. And look, I can't agree with you more that we've got a fundamental challenge in the way we regulate the mining sector, the resources sector, not only here in Queensland and in Australia, but around the world. As you know, I've been working on resources transactions for 15 years in 30-some countries around the world, and was amazed in 2004 when we began to see demand always higher than supply. And so you had a period that really has lasted about 8 years, up till 2012, in which the projects that have come on stream have always been more profitable than their cost basis. And so it stoked this boom. And around 2012 was when we began to see global trends in the governmental space increasing their takes of profits from the mining sector. So we saw the mineral resources rent tax, the super profit tax, and similar taxation and regulation movements around the world. But that was exactly at the time we found the tip of the iceberg, really. The pinnacle of where the mining sector achieved itself was exactly at the moment that the governments began to increase their cost regulation over the sector. And now we're finding ourselves at the end of a two and a half year period of collapse. And yet I don't think we are finding any wiser development or regulation with respect to the sector. I mean, so some of the things that really surprised me, Carson, to be more specific, is that we had, just take the top 3 global mining houses, BHP, Vale, Rio Tinto, collectively valued at around 300, they have lost around $350 billion in market capitalization in the last 3 years. And this has been at a period in which governments are trying to increase their take from the sector. At the same time, we're saying that the sector is collapsing, but Queensland last month had its greatest level of export of coal out of the state. In fact, WA, Perth, had probably its greatest level of export of iron ore out of its state. So how is it that we're finding demand remain robust in China and elsewhere around the world, yet prices are collapsing? Well, the argument I would make is that our regulatory system, combined with the engagement of the private sector and the mining executives themselves, have failed to understand valuation very effectively. And the result is that we've had tremendous loss to the sector, and hundreds of thousands of jobs in Australia and in the region have been affected by a misunderstanding of valuation, when to invest, and how to move on.
Well, yeah, as you say, and this is perhaps a closing remark as well. Yeah, you've fingered and you've put some of the blame at the foot of the government's own feet, but also, if anyone should understand the sector when it comes to valuations, it should be the very executives in the sector that have gone out on the spending spree. But notwithstanding that, time and again, we're getting write-downs. Rio, Mozambique, BHP, Queensland. I mean, the list is pretty excessive. So both mining execs and government don't escape. In other words, some share of the responsibility for this net.
Yeah, look, I guess what I'd like to be proposing, Carson, is that as a collective, whether it's government, the private sector, NGOs, and the executives, all have a better really should be held to a higher standard of understanding valuation. You know, we had this froth at the top of the market where Rio Tinto and BHP, Vale, spent more money than they would have expected to pay, but they thought that they would get a return on those investments. And in many cases, those investments 1 year after being made were written off. And now we're finding a circumstance where the mining sector is struggling, and these majors are selling off mines for almost nil value. So it just is hard to understand, how do you go from billions of dollars for some of these assets and now being sold off for almost nothing at the same point where demand, global demand, has stayed relatively steady. So the argument that I'm suggesting, Carson, is that as investors in the resources sector, the community, the global community and stakeholders need to be much more alert to fundamental long-term value.
Right.
What we're seeing is a volatility that is excessive, and that results in very bad results from a regulatory perspective. And our regulatory apparatus, our policy settings, need to be looking at how we can stop a boom-bust cycle, so that we have consistency.
Hear you loud and clear. There's lots to pack into that one. Robert, thank you as always.